I'm John Kaiser, conducting the backstage interviews for the September Virtual Metals Investor Forum. Consolidated Woodjam Copper Corp is the company right now, and Bill Morton, the CEO. Bill, welcome to the backstage interview.
Thank you very much, John. I look forward to some questions.
Okay, the Woodjam property was at one time owned by two juniors called Caribou Rose and Fjordland, who farmed out the project to Goldfields in 2009, then pooled their respective stakes into the spin-out Consolidated Woodjam, the current company. Woodfield spent over $30 million to vest for 51%, but decided not to go for 70% in 2013. In 2015, Goldfields did a deal to give back its 51% to Woodjam in exchange for a 19.9% equity stake. First, why did Goldfields lose interest in 2013? And second, why did Woodjam management not do any work on the project until 5 years later in 2020?
Okay, a couple of questions there, and I'll answer them. Goldfields did not lose interest in the project. Right to the end, it was considered to be one of their top three greenfields projects in the world. But they went through a restructuring. Goldfields in 2012, it was announced that it was going to break itself into two pieces, Sibanye Gold and Goldfields per se. Sibanye was going to get some of the deep rundown mines in South Africa. And there was a bit of a political sort of connection to all this. And it needed the money for sustaining capital to make this work. So all of a sudden, there was no money. So then Goldfields ceased all exploration other than some brownfield stuff with some existing mines worldwide and started shutting down operations. And so initially it was Denver that was an office that was ultimately responsible for us. It was shut down. They kept a satellite team in Vancouver for a while, and that was that. So they then attempted to sell what they had earned, and they got close to a couple of majors, but it always didn't quite happen. And eventually they had nobody to look after their interests at all, and they very in a very friendly fashion sent up their attorney to Vancouver, and we negotiated the 19.9% payment for the then 51% interest that they'd earned and the right to move forward, which obviously was extinguished by picking up by accepting those terms.
Okay, and when you resumed exploration, it was on the 32 million ton Deerhorn deposit, which is a set of gold-enriched copper porphyry dikes similar to the smaller Megabuck and Takom deposits. What was the purpose of last year's drill program? And what is the purpose of the drilling currently underway at Deerhorn, for which we will hear results in 8 to 12 weeks from now?
Well, Deerhorn is, well, last year was in deference to the higher gold sort of tenor of it was part of it. And it was a gold market that was happening, and we knew we could go to the gold areas, or we could go to the copper endowed areas, and we thought, well, I think maybe it was time to go for gold. The geology of it arguably is similar to what happens to Newcrest's operations in Australia. And the reason that's relevant is these are very complicated, but they're fantastic projects once you figure them out and you do enough drilling. So we believe that the Deerhorn can become much bigger, and it might. In fact, we've had other major groups look at this thing, and that's what really very much intrigues them is, do we have a ridgeway hiding here?
Okay, the southeast zone is a substantially larger copper porphyry deposit with modest gold and moly values. Although Goldfields had gold and moly assays, it did not include grades for these metals in its 2012 Southeast Zone 43101 resource estimate. This year, the first hole you drilled was a deep infill hole in the middle of the deposit where there appears to be a gold elevated structural zone within the overall system. So a couple of questions. One, why did Goldfields not bother with gold and moly grades? And two, what was the purpose of kicking off 2021 with an infill hole, and what did you learn from the results?
Okay, I think Goldfields did not include moly and or even gold in some of their in the southeast zone in their resource calculations, and part of that was not trying to trick themselves. They were approaching this thing from perspective of a South African-based company that was going to spend an awful lot of money, and they wanted just to make sure that they didn't get caught in promoting something that was maybe ahead of itself. Disagree with that, but that because nobody else would do it that way. But that's what happened. As I said in the presentation, that I think that the presence of Moly in this thing, it is unquantified in the Southeast Zone, but it's substantial, is very important because the best of copper gold porphyries in the world, and I use Bingham as an example, with a grade of 0.44 copper, 0.16 grams gold, and 0.031% Moly. These are the very similar numbers that we're getting at Southeast Zone. You know, perhaps Bingham is a little bit higher grade at this point in time, but it's the ingredients that are part of the stew here. They're all there.
Okay.
Now, what we did this year, the idea of drilling the infill hole was twofold. Number one, we were something just popped up on my screen. Number one, we were going to put the Southeast Zone back on the map. We hadn't drilled a hole there since 2013. In this area where we infilled this hole, there was some big gap. When I say big gap, it was 130 meters plus or minus between collars. We thought, okay, let's drill a hole here. The other thing was trying to see if, in fact, in and around this thing, we could more credibly confirm that it's higher grade and has higher gold tenor. And to that degree, we did. You know, the hole, the better part of that hole, 142 meters, 0.56% copper, is also 0.23 grams per ton gold. Part of the evolving concept here, and this was Goldfields just when they left, was that there is a unit in the Southeast Zone which is slightly younger in age and cross-cutting some of the other stuff, and that's carrying much higher gold. So we're still working on that. Now that's has important ramifications if it turns out to be right.
Now, the Deerhorn group and the Southeast Zone are distinctly different styles of porphyry deposit. The Deerhorn group has strong gold grades, and both gold and copper grades may increase at depth like other BC porphyries such as Redcrest, in which Newcrest is now a majority owner. The Southeast Zone is more a traditional BC copper porphyry, and in your case, their grades diminish with depth. An obvious future mining scenario is to mine these two types of deposits simultaneously and blend the ore in a central processing facility. What do you already know about the metallurgical plausibility of doing this? And will you use the fresh core from the Southeast Zone infill hole and the Deerhorn holes to conduct metallurgical studies?
Okay, a couple of questions there. Number one, Goldfields, that was their concept, that these holes, these deposits, although they're slightly different, share a mode of mineralization such that they would be amenable to recovering in the same facility almost the same way. Southeast Zone has the highest recoveries at this point in time. Deerhorn and the Megabuck recoveries are okay, and in fact, the resources that are in my presentation are actually diluted numbers that reflect where they're at currently with recoveries, i.e. the South Deerhorn Zone with 0.22% copper, 0.49 grams per ton gold. That's a number taking in recoveries. So the metallurgy that Goldfields did do was all bench or tabletop type stuff. It was all very good. No red herring seemed to come out of it. Ongoing work would have to be more diligent and more extensive in its sort of undertaking. But yeah, no, I think this thing is ultimately going to be mined, and these various deposits are all going to feed one facility quite easily. Okay.
The second two holes that you drilled this year were into the southern part of the megaton IP anomaly. And while the results are not ore grade, the mineralization is similar to that of the Southeast Zone and might be part of the same mineralizing system. Megaton's IP footprint is such that if this system ends up having open pitable grades similar to the Southeast Zone, this could boost the resource significantly. Why did you not drill a couple holes into the northern half of the anomaly to see if the grade gets better? When do you plan to drill those two holes so that you can make the megaton target into a delineation play, or break it so that you can just focus on the feasibility of developing the southeast zone as it currently stands?
Okay, well, we definitely will drill it, and it may be more than 2 holes. This round, we didn't drill it because Mother Nature had put a creek in the wrong place there, and we could get at the southern half of it from the southeast zone where we were starting. And then in order to drill the northern half, there is a road system, but it comes in a different way. So we drilled those holes, and the target actually is better on the north side of it. It hasn't been drilled yet. We will drill it. Now, we're currently drilling. We're, as I said in the presentation, that we're hoping to drill as many as 10 holes. We're about 8 into it. Whether or not we get to it this round, I'm not sure. We're having enough success, we believe, on the Deerhorn area that, for efficiency's sake, we're kind of driven just to drill a few more holes there. But the megaton area has huge potential for greatly expanding the tonnage of the southeast zone.
Okay. The Woodjam project has very little outcrop because it is covered by overburden and also to a large degree covered by a thin veneer of barren younger rock. The 4 deposits plus the megaton target show up as IP anomalies with varying degrees of intensity. Does this mean that the blank areas around these deposits are pretty much dead, or are there geophysical tools that could still be applied on a property-wide basis that might reveal new drill targets?
Well, I think what we see with respect to IP is that, particularly on the gold ridge targets, that it'll pull you into the target in a gross sense, but some of the best results are actually in lower chargeable features. So if you don't have any chargeable feature on one of those kinds of targets, then it's a bit more of a shot in the dark. But southeast zone, to some degree, is a bullseye, no question. I think if you look at comparable results on other deposits, that the mineralization will extend beyond the bullseyes, and the chargeable numbers that are still happening that on the map look weak are still substantial. So we really all we know is we got somewhere to justify drilling the first number of holes, and then we go from there.
Mm-hmm. When Goldfields delineated the southeast zone, copper was around $2.50 a pound, but copper so far this year has spent all of it above $4 a pound. So I've done an outcome visualization for 30,000 ton per day open pit mine with the existing resource that does not include any gold or moly, and definitely does not blend any Deerhorn ore into it. And assuming my cost numbers are reasonable, the southeast zone at the current copper price clears key NPV and IRR development hurdles. What does management want to see before it makes a decision to shift from expansion or discovery-related exploration to feasibility demonstration work to support a 43-101 PEA?
What do we want to see? Well, I think right now we want to see improved share price, particularly, and we believe that the way to get that is get the audience sort of cognizant of the ultimate potential for this thing to get bigger. At that point, you're dead right. It's time to transition into a development scenario, and arguably there's enough already there to support a mine. I think it's the kind of thing that, depending on the market right now, we easily could sort of shift it gears into that manner. But right now, I think we're still trying to confirm and point out the tremendous exploration sort of opportunity here. One of the deposits, case in point, that I haven't even talked about in this presentation is something that Goldfields found in 2013, the last year that they were there, Three Firs. One of the northern holes in the Three Firs zone goes through some weaker, but nevertheless interesting copper minerals. To say weaker, it's all 0.2 plus. And then at the bottom of the hole, the last 4 samples are all over 0.4 copper. It actually ends in 1.2 copper and 1.2% or 1.2 grams gold. It's a kind of an area where we have no idea how big that is. And it's the kind of thing that sort of sits in several spots on the property that just tells us that the opportunity right now is discovery.
Mm-hmm. The Eastfield Group, headed by yourself, Bill Morton, and Glenn Garrett, has for decades operated as a British Columbia prospect generator, which religiously farms out the heavy lifting to stronger parties, be it a major or a well-promoted junior. But when you add up all the spinouts that resulted from the original mothership, Eastfield Resources, your shareholders have done very well, just never gloriously like the ones who end up with 100% or majority control in a company. Now, you guys aren't youngsters anymore. And if you make this decision that you need to now go to feasibility demonstration, and that doesn't mean you rule out doing some exploratory work on the side in this project, are you going to punt the project to as you always have, or are you going to break with the model and try to deliver this across the finish line on a 100% basis? And if you want to do that, what sort of help do you think your group needs to pull that off?
Okay, we believe this is the best project that we've managed to come up with in our careers. And at this point in time, our inclination is to keep 100% of it. We have had at least 5 offers from well-connected, strong groups in the last 12 months that would like to enter into some kind of deal with us, and we've turned them all down. So we're really not inclined to look for a partner. Now, if and when a partner does happen, and obviously it will, we would prefer that it is major, somebody with operating expertise. And with the deal that we would be more inclined to sort of look favorably on would be something like what GT Gold did with Newmont, where a company that can do the heavy lifting comes in and takes a position in the company and not a position specifically in the project.
In other words, as you said, answered in your earlier question, you need more eyeballs on this company to get the stock price up, to raise additional financing, to kick things off, and possibly you might get it through a strategic new partner with a 19.9% stake who would have a leg up in any competitive auctioning of the 100% ownership of the company down the road. Thank you, Bill, for this participating in this backstage interview. This now closes this session of the backstage interview of the September Virtual Metals Investor Forum.